Good morning, Jags. This is Fahad. Today is Friday, November 13th. Let's get started. Today is Friday the 13th, and next week on Monday, which is November 16th, before market opens, Palo Alto Network, PANW, will report earnings. So that's next week on Monday before market opens. And here's the chart in front of you. I'm expecting this company to post a very strong quarter and the stock to break out potentially to new 52-week high. If you look at the technical patterns over here, you will see that this is starting to bang against this important trend line resistance that has been in place since at least early August. And for the last couple of days, it has been forming a tight bull flag here while the MACD and the RSI trends remain firmly in uptrend. If it starts to break out through $260 per share, that means it will clear all of this VOP congestion level, which opens the door for a new 52-week high. Here's another way to take a look at this. This is from stock charts. Same trend, same charts, but you can see clearly the MACD is an uptrend. Volume profile is gradually picking up, tends to be bullish. RSI has materially improved. Here's another way of you can take a look at this, where RSI is starting to clear the downtrending resistance essentially, right? So the momentum indicators are improving overall for Palo Alto Network. Now, on the fundamental side of things, here's something interesting. Last night, Cisco Systems reported earnings, and Cisco Systems is going to gap higher sharply by nearly 7 or 8% in pre-market. It's been holding rather very steady. So if you look at the hourly candles, you will see Cisco Systems is going to have a pretty good day in the market today. Interestingly, here's what I found out in the security system when I looked at its financial statements. Turns out that the only part of the entire product revenues and the service revenues that was positive on a year-over-year basis was security, right over here. Infrastructure platform was down 15.9% year-over-year. Applications were down 7.9%. Security was up 5.6%, and everything else was down 80%. So security was the only thing. So after looking at that, then I went to pull up the actual earnings conference call, the transcript, and here's a direct quote that comes from the CEO of Cisco Systems. As our customers, employees remain working from home, they're looking to bolster their existing security efforts with unified user and endpoint protection. Endpoint protection is the most important element here. We continue to benefit from the shift to cloud-based security capabilities and had robust growth in our secure remote worker offer that includes Duo, Umbrella, and AnyConnect. So here's Cisco Systems that has previously struggled to maintain its market leadership position against Palo Alto Network and Fortinet. The dog basically is coming out telling you that their security business was strong, and as a result, the stock is spiking sharply higher. If the company that has been struggling previously is telling you cybersecurity is strong, then I wonder how strong it really was for the absolute leader in space, which is Palo Alto Network. And that's how I'm connecting the dots for you over here. Here's something else to keep in mind too. Palo Alto Network quietly has been going on an M&A spree for last 2 years. We don't talk about this as much, but PANW has spent $2.9 billion in last 2 years acquiring a whole bunch of companies. More than 8 transactions or 9 transactions in totals have been done, including one that was announced very recently, just a couple of days ago on November 11th, when they bought a company called XPEL for attack surface management, and this was the biggest of all of them, which was acquired for $800 million. These acquisitions ultimately get combined into different kinds of suites that the company sells to address cybersecurity needs. They get bundled, they get packaged, and then they get sold to the enterprise customers. And I wonder, since many of these cybersecurity acquisitions are done for the end user market, and that's exactly the area where Cisco Systems is telling us that they're seeing the benefits, I wonder if these acquisitions are actually already starting to pay off materially. At a minimum, they should support stronger growth with all these acquisitions come into play. And then the one last thing that I will mention is that there is an earnings preview out for Palo Alto Network from analysts at Mizuho. And here is a quote from Mizuho. They say that, quote, we expect Palo Alto Network can exceed our and street billings target of 16% year over year. Within that, we forecast next generation security, which is mostly cloud billings, of nearly $300 million, and that will be up 70% year over year, and it will comprise of 28% year over year. Now, let me tell you how the significance of this. 70% year over year growth in their next generation security. What is that next generation security? That security is called Prisma Cloud 2.0. Prisma Cloud 2.0 was launched less than 3 months ago. And the last time when the company reported earnings over here, they talked about that this business accelerated with immediate adoption right off the bat, resulting in over 40% growth rate year over year. And now Mizuho is telling us that that growth rate could potentially accelerate to 70% year over year, and it will comprise a total of 28% of the total revenues from the company. So Prisma Cloud 2.0. Lastly, they go on to say that the billings growth last quarter was very strong, up 32% year over year. But for the upcoming quarter, the street is conservative, modeling only 16% growth. So there is a potential to break that barrier and surprise to the upside if this quarter that will be reported next week ends up being equally as strong as the last quarter. So I like the stock, I like the technical picture, and I like the fundamental outlook on this company with the read-throughs that we're getting, and I think there's a potential for breakout to new 52-week high. That's it from me. Jay?
Good morning, Fahad. Today, I just want to take a quick look again at Unity Software, ticker is U. The company reported earnings after the close yesterday, and it looks like stock is essentially flat right now pre-market. But it was a good quarter. Company beat on the top and bottom line. Total revenue was up 53.3% year over year. Its Create Solutions segment, that revenue came in at 63 million versus 57.2. Operate Solutions came in at 120 million versus 112.4 estimate. Billings came in at 207.6 million versus 190.4 estimate. Customers that generated more than 100,000 in revenue came in at 739, and this compares to 553 last year and 716 quarter over quarter. The company saw a positive response to new titles, gaming titles such as Fall Guys, Among Us, and Genshin Impact. And if you go back to October 12th, the success that Genshin Impact was having was why I brought this stock up to begin with. They're definitely set up for the new consoles. They highlighted that right now, Unity is used by over 60 studios that develop games for the PS5 and 7 Xbox Series X titles. And two other points of interest, in a note today from Stifel, they did raise their price target to 95. They do mention that Q4 is historically a strong quarter for the company and its operate segment, just because of the holidays and users being able to spend more time at home playing games. And due to COVID, Stifel wonders if there was some sort of increased sort of pull through or pull forward in revenue from Q4 into Q3. Now we'll have to wait and find out in a few months if that's the case, but you could also say that with cases on the rise, this really shouldn't have much of an impact. And the last thing I want to point out, and something that I did not mention when I first brought this stock up on October 12th, was IDFA and Apple. IDFA stands for the Identifier for Advertisers. And this is essentially means for advertisers to target and track users within apps on iOS devices. So essentially IDFA is a cookie on a device instead of a browser. So it enables an advertiser to get notified when a user of a phone has taken action clicking on an ad in a browser and then installing, using, or interacting with the ad. In Stifel's initiation note, they highlight that, well, and before I go into that, Apple is essentially getting rid of IDFA. They're essentially killing this mechanic. So in the initiation note, Stifel says the impact and timing of IDFA to the company's operate business continues to remain unknown, but it should become a tailwind for Unity because of the sort of the advantage the company has with its create segment. And then on the conference call last night, essentially they said that the IDFA changes by Apple have been moved to early next year to allow developers and vendors a chance to get a plan in order. But like I said, this will affect the company's operate solution segment, but it would be offset by its create solution segment, essentially because of the way it collects data, even in that segment. So we should see a tailwind, unlike other companies, regarding IDFA.
Interesting. I wonder, in your opinion, is that quarters down the road a risk at all? I mean,
I don't think it's a
it
major
doesn't.
risk.
Yeah, because there's so many other moving parts that are positive trending in the favor of the company that, and this just doesn't sound like as big of a deal. I can't imagine. So, but anyways, overall though, this quarter was fabulous. I was surprised initially the stock was acting weak,
Yeah.
no good reason. And now we can see it is basically going to open up flat over here. And I think that the only pushback that this is on this stock that we're going to hear from the analyst community is going to be valuation.
Right.
Aside from that, there's nothing else. But yeah, great quarter. I think the downside is limited, and I think that with all the trends in its favor, particularly with the new game consoles coming out, that's going to only expedite and accelerate the 3D gaming development process. I think there's more upside ahead in the stock. So, thank you.
Yep.
Chronicle.
Morning. Happy Friday the 13th.
Yes.
Have a recap of XPEL earnings from a couple days ago. I've gone over the numbers and listened to the conference call and then had a look at the transcript again later. So although I'm taking more of a long-term view on the company, I still have to say this was a near perfect earnings report. I say near perfect because there was one minor blemish that I'll touch on in just a bit. Now, as far as the headline numbers go for the top and bottom line and segments, we already covered that in the first read as well as in Jaguar Live. EPS beating consensus by 7 cents and up 8 cents versus a year ago. And if I'm not mistaken, I believe consensus consists of just 2 analysts. Meanwhile, revenue was up 30% year over year, with almost all regions reporting record revenue. On top of that, EBITDA grew 50.5% to 9 million, and gross margin continues to be impressive at 34.8%. So that's all the surface level stuff. Now, if anyone's wondering why the stock saw some volatility after the company reported, well, this stock tends to be quite volatile historically speaking because of the low float. That's one thing. But the other factor is if we look at the headline numbers, I think what spooked the market initially after the earnings report was China's sales showed flat year-over-year growth. On the surface, this would be concerning, but then during the conference call a couple hours later, management provided an explanation for why the China revenue came in lower than expected. So if we look at the transcript of the call, maybe we can share this screenshot on Telegram later because the text might be too small, but basically the CEO, Ryan Pape, said that this was due to the company having to push orders from Q3 to Q4 to fulfill strong demand. And so this is going to result in difficult comparisons for Q3 and also possibly Q4. But this is nothing to do with demand. Chinese demand is still very strong. As we can see, sales from XPEL's distributor in China was actually up 30%. So it's not a demand problem. And then looking ahead, after we get past Q3 and Q4 and all of the complications associated with shipment timing, management is expecting Q1 to be a blowout for China, which would be a more accurate reflection of growing demand there. Meanwhile, they are planning to increase inventory levels by between $5 to $6 million, which will help them realize some cost efficiencies and also to meet accelerated demand. So I think after this was cleared up in the conference call, that's when the market realized that this China flat sales growth wasn't as bad as it looked on the surface. And it's now had a couple days to digest all of this. Because apart from that, everything else in the report was perfect. Every other region saw record sales. Like Canada saw a huge recovery following the pandemic with their Protex acquisition from February exceeding expectations. And then in Europe, revenue grew 88% with strong contribution from every country that they operate in. The CEO later answered a question from a B. Riley analyst regarding Europe. This is a region that looks to be where they're focusing to grow because right now their revenue per capita over there is still relatively low. So they're now taking their successful growth strategy in France and they're looking to replicate that in other European countries next year and to continue building their network. And finally, the last bit of commentary I caught from management, and this might be going under the radar, is that XPEL is starting to see increased adoption in China of their other products beyond paint protection films. So remember when we talked about the company's other offerings like ceramic coating, architectural films, and window films, China will be a huge market for that going forward.
Excellent update. Thank you. Always appreciate following up with the names that we have covered in Jaguar Media to see what stood out in the earnings report and the risks and the opportunities. Just a reminder to everybody watching this that XPEL was the first episode of the new series called the Investing Series that we started on October 9th in Jaguar Media. So if you go to the website, it's free, it's available. You can watch the entire video over here, as well as at the bottom, you will see the full research note and the slide deck attached to it. A big bull case was presented, and this was when the stock was trading at about October 9th, right? So the stock was trading right around here, $27 roughly per share. So it's now at 33. So on a percentage basis, this thing is up about 22% since we discussed that bull case, and now it's starting to break out to new 52-week high. You know, I also saw just you went into far more details than I would have dug in, but and that's good. I only saw the headline data that came out, and then I looked at some of the management commentary, and it was quite positive yesterday when I was looking at it. So it didn't make much of a sense why it was selling off, but now it's clear from all the details that you discussed. Initially, there was a little shakeout because the Chinese growth was a little bit disappointing, and now it's immediately making a comeback and hitting new 52-week high. Great stuff. I still believe it goes higher. All right, folks, we're going to stop over here. Thank you very much for joining, and have a great weekend. We'll see you next week.